2025. The 2025 Crypto Crime Report. The rising role of cryptocurrency in all forms of crime and how its transparency is creating unique opportunities for investigation. Table of Contents. Introduction. 1. Ransomware. 9. Darknet markets. 22. Market manipulation. 38. Scams. 53. Stolen funds. 72. Sanctions. 87. Extremism. 105. Organized crime. 118. Introduction. Illicit volumes portend record year as on-chain crime becomes increasingly diverse and professionalized. In recent years, cryptocurrency has become increasingly mainstream. Although illicit activity on-chain previously revolved heavily around cybercrime, cryptocurrency is now also being used to fund and facilitate all kinds of threats, ranging from national security to consumer protection. As cryptocurrency has gained greater acceptance, illicit on-chain activity, too, has become more varied. For example, some illicit actors primarily operate off-chain, but move funds on-chain for laundering. We report on certain defined categories: stolen funds, darknet markets, and ransomware, to name a few, on an annual basis. However, with the diversification of crypto crime to include all types of crime, the on-chain illicit ecosystem has witnessed increasing professionalization, with a broadening array of illicit actor organizations and networks using cryptocurrency, as well as increased complexity in their operations. In particular, we have seen the emergence of large-scale on-chain services that provide infrastructure for numerous types of illicit actors to help them launder their ill-gotten crypto. How are these developments playing out on-chain? Let's take a look at the data and high-level trends. Introduction. 2. According to our metrics today, it looks like 2024 saw a drop in value received by illicit cryptocurrency addresses to a total of $40.9 billion. However, 2024 was likely a record year for inflows to illicit actors, as these figures are lower-bound estimates based on inflows to the illicit addresses we've identified up to today. A year from now, these totals will be higher, as we identify more illicit addresses and incorporate their historic activity into our estimates. For instance, when we published last year's crypto crime report, we reported $24.2 billion for 2023. 1 year later, our updated estimate for 2023 is $46.1 billion. Much of that growth came from various types of illicit actor organizations, such as vendors operating through who we own, which provide on-chain infrastructure and laundering services for high-risk and illicit actors. It stands to reason that 2024's illicit cryptocurrency volume will exceed that of 2023. Since 2020, our annual estimates of illicit activity, which include both evidentiary attributions and Chainalysis signals data, have grown by an average of 25% between annual reporting periods. Assuming a similar growth rate between now and next year's crypto crime report, our annual totals for 2024 could surpass the $51 billion threshold. In general, our totals exclude revenue from non-cryptonative crime, such as traditional drug trafficking and other crimes in which crypto may be used as a means of payment or laundering. Such transactions are virtually indistinguishable from licit transactions in on-chain data, although law enforcement with off-chain information can still investigate these crimes using Chainalysis solutions. In cases where we're able to confirm such information, we count the transactions as illicit in our data. For example, since the conviction of FTX's former CEO of fraud, our 2022 figures have included the $8.7 billion in creditor claims against the
legitimacy of the digital asset market itself. Significantly, compliance and risk leaders believe that greater clarity around compliance requirements would instill CONF identities into their organizations and enable them to advance their digital asset strategies and expand their activities. 96% of compliance and risk leaders state that well-defined and regulatory frameworks are urgently needed for their organization to progress with its digital asset strategy. 89% believe that regulatory approval for cryptocurrencies will improve institutional adoption of crypto. 2% not at all CONF ident. 28% not particularly CONF ident. 46% quite CONF ident. 24% very CONF ident. Assuming clarity and compliance requirements, how CONF ident is your organization in the compliance perspective to progress with the digital asset strategy? How greater clarity on compliance requirements would impact organizational CONF idents around crypto? 11. STATENIOFCRYPTO2025. There has been a lot of progress over the last couple of years with several jurisdictions around the world implementing comprehensive regulatory frameworks around crypto. working with industry to clarify compliance expectations. Regulators in Hong Kong have established regulatory sandbox frameworks that are enabling financial institutions to test out new crypto-related products and services. Obviously, the U.S. has been the big exception to this trend towards regulatory clarity, but there is now a lot of hope across the industry that we can see a more cohesive approach to regulation in the U.S. going forward. In the U.S., it's likely we'll see a substantial change in approach to crypto within key regulatory agencies. For instance, Tech will abandon the enforcement DB stance that we saw under the Biden administration and adopt a more favorable view of crypto. Likewise, the OFICE of the Controller of the Currency, OCC, and the Federal Deposit Insurance Corporation, FDIC, will take a more permissive view of the suitability of banks to engage with crypto. So we'll see a change of tone and change of policy direction that will enable.
For example, since the conviction of FTX's former CEO of fraud, our 2022 figures have included the $8.7 billion in creditor claims against the exchange. However, there are almost certainly many instances where we do not have such confirmation, and therefore the numbers would not be reflected in our totals. Introduction 3. Introduction 4. At the time of this publication, we see a reduction in absolute value of illicit activity year-over-year (YoY). However, based on historical growth rates, we suspect that this number will eventually exceed last year's total as our data attributions improve. In addition, our estimate for the share of all attributed crypto transaction volume associated with illicit activity, depicted below, also fell to 0.14% from 0.61% in 2023.1. Similarly, we expect this share to rise over time, although historically these rates consistently remain below 1%. As we initially shared in our mid-year crypto crime update, another important update this year is that we've begun to factor suspected illicit activity into our total estimates for certain crime types, based on Signal's data. Previously, our estimates included only totals tied to addresses for which we had supporting documentation demonstrating that they belong to a certain illicit entity. Signals leverages on-chain data and heuristics to identify the suspected category for a particular unknown address or cluster of addresses, with confidence levels ranging from likely to almost certain. The introduction of signals not only grows our estimates of certain illicit activity categories over time, but also enables us to refine previous year's estimates, given more time has passed to collect inputs and understand on-chain patterns of suspicious activity. As bad actors continue to evolve their tactics, so too will our methods of detecting and disrupting them. One transaction volume is a measure of all attributed economic activity, a proxy for funds changing hands. We have tweaked our methodology this year to include only transactions involving at least one attributed entity, while removing peel chains, internal service transactions, transactions between two personal wallets, change, and any other type of transaction that would not count as an economic transaction between distinct economic actors. Introduction 5. We are also seeing a continued trend vis-a-vis the types of assets involved in crypto crime. Through 2021, BTC was unequivocally the cryptocurrency of choice among cybercriminals, likely due to its high liquidity. Since then, however, we have observed a steady diversification away from BTC, with stablecoins now occupying the majority of all illicit transaction volume, 63% of all illicit transactions. This new reality is part of a broader ecosystem trend in which stablecoins also occupy a sizable percentage of all crypto activity, demonstrated by total growth YoY in stablecoin activity around 77%. In our 2024 Geography of Cryptocurrency report, we covered the wide array of practical use cases for stable coins in a range of markets, such as storing value, sending remittances, facilitating cross-border payments, and international trade. Additionally, stablecoin issuers often freeze funds if they are made aware of their use by illicit actors. For example, Tether has frozen addresses of concern linked to scams, terrorist financing, and sanctions evasion, which can make stablecoins a poor tool for the transfer of value by illicit actors. Nonetheless, despite these ecosystem-wide trends, some forms of crypto crime, such as ransomware and darknet market (DNM) sales, remain BTC dominated. The popular privacy coin Monero, although an increasingly important part of the DNM ecosystem, is not included in the analysis for this report. Other illicit activity, such as scamming or laundering stolen funds, often take a more eclectic approach and spread out across all asset types. Others, such as transactions associated with sanctioned entities, have shifted primarily to stable coins. Sanctioned entities, including individuals operating in sanctioned jurisdictions, often have a greater incentive to use stable coins due to challenges otherwise accessing the US dollar through traditional means amid a desire to benefit from its stability. Introduction 6. Below, we'll take a closer look at 3 key trends that defined crypto crime in 2024 and will be important to watch going forward. Stolen funds and scams still prolific. Stolen funds increased by approximately 21% YoY to $2.2 billion. Although the largest share of stolen funds was robbed from decentralized finance DeFi services, centralized services were the most targeted in Q2 and Q3. Private key compromises accounted for the largest share, 43.8%, of stolen crypto in 2024, with North Korean hackers stealing more from crypto platforms than ever before. $1.34 billion, representing 61% of the total amount stolen for the year. Some of these events appear to be linked to North Korean IT workers, who have been increasingly infiltrating crypto and Web3 companies, compromising their networks, and using sophisticated tactics, techniques, and procedures (TDPs). High and low-tech fraud and scams were prolific in 2024, with high-yield investment scams and pig butchering representing the most successful fraud and scam types. We have also observed the increasing use of artificial intelligence (AI) in the fraud and scam space, such as in highly personalized sextortion attacks. This use of AI is consistent with a broader trend across a range of illicit cybercrimes, as services have emerged that leverage AI to bypass Know Your Customer (KYC) requirements. Fraud and scam operators are also leveraging guarantee services such as Huion, discussed below, while crypto ATM scams are a growing concern, especially as they relate to elder fraud. Ransomware still front and center. Darknet markets and fraud shop volumes on the decline. Ransomware has continued to see revenues in the hundreds of millions of dollars, but a number of large, multilateral law enforcement disruptions coupled with decreased victim appetite to pay ransoms have made a dent in the ecosystem. 2024 has nonetheless been a productive year, as attack volume was relatively sustained and some ransomware groups have still managed to eke out payments, albeit in lower amounts. DNMs received $2 billion as opposed to close to $2.3 billion in 2023, while fraud shop volume is down by slightly more than half at $220.1 million. This marked decline for fraud shops is due in part to a large U.S. Dutch takedown of Universal Anonymous Payment System (UAPS), a crypto payment processor that facilitated transactions for hundreds of fraud shops, including Brian Dumps and Faceless. Crypto crime landscape increasingly diverse and professionalized. An array of illicit actors, including transnational organized crime groups, are increasingly leveraging cryptocurrency for traditional crime types, such as drug trafficking, gambling, intellectual property theft, money laundering, human and wildlife trafficking, and violent crime. Furthermore, some criminal networks are resorting to crypto to facilitate polycrime, or multiple crime types. Indeed, of the total $40.9 billion received by illicit crypto addresses in 2024, $10.8 billion was received by illicit actor.org, our catch-all term for wallets of services and individuals both directly committing cybercrime like hacking, extortion. Introduction. 7. Trafficking, or scams, as well as those facilitating this activity by selling the underlying infrastructure, tools, and services needed to commit crime and profit, including laundering ASA service. Trafficking, or scams, as well as those facilitating this activity by selling the underlying infrastructure, tools, and services needed to commit crime and profit, including laundering ASA service. Perhaps no entity better illustrates the professionalization of the crypto crime ecosystem than the online marketplace Huion Guarantee. As we highlighted in our 2024 mid-year crypto crime update, Huion and all vendors operating on their platform have processed more than $70 billion in crypto transactions since 2021. This platform has provided infrastructure which facilitates the sale of scam technology and processed on-chain transactions for pig butchering and other fraud and scams. Addresses reported as stolen funds. Sanctioned entities such as the Russian exchange Garantex, fraud shops, child sexual abuse material, and China's language gambling sites and casinos, among others. Introduction. 8. Ransomware. Introduction. 9. 35% year-over-year decrease in ransomware payments. Less than half of recorded incidents resulted in victim payments. The ransomware landscape experienced significant changes in 2024, with cryptocurrency continuing to play a central role in extortion. However, the total volume of ransom payments decreased year-over-year (YoY) by approximately 35%, driven by increased law enforcement actions, improved international collaboration, and a growing refusal by victims to pay. In response, many attackers shifted tactics, with new ransomware strains emerging from rebranded, leaked, or purchased code, reflecting a more adaptive and agile threat environment. Ransomware operations have also become faster, with negotiations often beginning within hours of data exfiltration. Attackers range from nation-state actors to ransomware ASA service ROS operations, loan operators, and data theft extortion groups. such as those who extorted and stole data from Snowflake, a cloud service provider. In this chapter, we'll explore these developments and their implications, including a variety of case studies. Lockbit, Iranian ransomware strains, Akira Fog, and INC links that exemplify this year's trends. Ransomware activity shifts halfway through the year. In 2024, ransomware attackers received approximately $813.55 million in payments from victims, a 35% decrease from 2023's record-setting year of $1.25 billion, and for the first time since 2022, ransomware revenues declined. As we noted in our mid-year crime update, value extorted by ransomware attackers between January and June 2024 had reached $459.8 million, approximately 2.38% higher than the value extorted over the same time period in 2023. H1 2024 also saw a few exceptionally large payments, such as the record-breaking $75 million payment to Dark Angels. Despite its small half-over-half increase, we expected 2024 to surpass 2023's totals by the end of the year. Fortunately, however, payment activity slowed after July 2024 by approximately 34.9%. This slowdown is similar to the decline in ransom payments since 2021 and the overall decline during H2 2024 in some types of crypto-related crime, such as stolen funds. Notably, the decline this year is more pronounced than in the last 3 years. Ransomware 10. Ransomware 11. A closer examination of the top 10 ransomware strains in terms of H1 revenue provides valuable insights into the groups driving these trends. As we see in the below chart, Akira, which has targeted more than 250 entities since March 2023, is the only H1 top 10 ransomware strain to have ramped up its efforts in H2 2024. Lockbit, which was disrupted by the United Kingdom's National Crime Agency (NCA) and the U.S. Federal Bureau of Investigation (FBI) in early 2024, saw H2 payments decrease by approximately 79%. Showcasing the effectiveness of international law enforcement collaboration. ALPHV Black Cat, which had been among 2023's top grossing strains, exit scammed in January 2024, leaving a void in H2. As Lizzie Cookson, Senior Director of Incident Response at Coveware, a ransomware incident response firm, told us the market never returned to the previous status quo following the collapse of Lockbit and Black Cat ALPHB. We saw a rise in lone actors, but we did not see any groups swiftly absorb their market share, as we had seen happen after prior high-profile takedowns and closures. The current ransomware ecosystem is infused with a lot of newcomers who tend to focus efforts on the small to mid-sized markets, which in turn are associated with more modest ransom demands. Ransomware. 12. To further contextualize what may have driven H2's decrease in ransomware payment activity, we first looked at data leak sites, which could be a proxy for ransomware events. In the below chart, we can see that the number of ransomware events increased into H2, but on-chain payments declined, suggesting that more victims were targeted, but fewer paid. Source: ecrime.ch. Data leak sites posted more victims in 2024 than in any year prior. Not only were there more alleged victims, but, according to Alan Lishka, threat intelligence analyst at Recorded Future, there were 56 new data leak sites in 2024, more than double the number Recorded Future identified in 2023. However, there are some caveats to consider with data leak site information and what it suggests about the ransomware ecosystem. Corson Kamishal, threat researcher at eCrime, shared more information on the legitimacy of leaks. We have observed leak site posts claiming organizations, only to fail on a deeper analysis. For example, we have seen claims for multinational organizations, but in reality, only a smaller subsidiary was impacted. More than 100 organizations got listed on 2 or more data leak sites in 2024. The Meow leak site plays a big role in this, seeming to compromise websites and list data taken from web servers or databases. Another reason for the inverse relationship between ransomware payments and data leak site victims shown above could be that threat actors have been caught overstating or lying about victims or reposting claims by old victims. The Lockbit operators played games to pretend to stay relevant and active after a law enforcement action called Operation Chronos, as they reposted many previously listed claims again or added attacks that happened a long time ago, some even over 1 year ago, Kamishal added. Ransomware. 13. Lishka also shared with us information about illegitimate victims posted to data leak sites, stating, "This is especially true of Lockbit, which, in a bid to remain relevant after being ostracized by much of the underground community post-law enforcement action, has published as high as 68% repeat or straight-up fabricated victims on its data leak site." In the aftermath of the Lockbit disruption and Black Cat's exit scam, another interesting phenomenon has been the rise of Ransom Hub Ross, which absorbed a lot of the displaced operators from Lockbit and Black Cat. Ransom Hub posted the highest number of victims in 2024, according to Camishal, and despite only emerging in February 2024, ranked in the top 10 strains for 2024, according to on-chain data. Incident response data show that the gap between the amounts demanded and paid continues to increase. In H2 2024, there was a 53% difference between the two factors. Reporting from incident response firms suggests a majority of clients opt not to pay altogether, which means the actual gap is larger than the below numbers suggest. We spoke to Dan Saunders, Director, Incident Response, EMEA at Kivu Consulting, a cybersecurity incident response firm, to learn more about this victim resilience. According to our data, around 30% of negotiations actually lead to payments or the victims deciding to pay the ransoms. Generally, these decisions are made based on the perceived value of data that's specifically been compromised, he stated. Similarly, Cookson noted that, thanks to improved cyber hygiene and overall resiliency, victims are increasingly able to resist demands and explore multiple options to recover from an attack. They may ultimately determine that a decryption tool is their best option and negotiate to reduce the final payment, but more often, they find that restoring from recent backups is the faster and more cost-effective path, she added. Final payment amounts typically ranged from $150,000 to $250,000, regardless of initial demands. Ransomware. 14. When looking at the figure below, we can see the evolution of ransomware payment distributions into 2024. In 2020, there was a long tail but a single hump to ransomware payments, but in 2024, there were three classes of ransomware actors. Some, such as Phobos, have average payments clustering at less than $500 minus $1,000. There is another cluster around $10,000 and a third with payments north of $100,000, some of which reached $1 million. We also see more events at the higher end of the distribution, meaning proportionately greater attacks in excess of $1 million. This segmentation reflects the shift in the ransomware actor landscape that Cookson observed, with smaller groups dominating low and mid-value payments, while the outlier 7 to 8-figure ransoms push the distribution rightward toward the third class of payments. Ransomware. 15. In the below chart, we can see which strains were the worst in terms of total value extorted, bubble size, median payment size, x-axis, and an index of extortion events, y-axis. Ransomware off-ramping. Where did the funds go? Understanding ransomware laundering methods offers critical insights into post-exploit threat actor behavior, enabling law enforcement to respond more efficiently and, in some cases, anticipate future actions based on established patterns. In the below chart, we see that ransom funds primarily flowed through centralized exchanges, CEXs, used to off-ramp funds, personal wallets, to hold funds, and bridges, to attempt to obscure the movement of funds. We note a substantial decline in the use of mixers in 2024. Historically, mixing services routinely captured between 10% and 15% of ransomware quarterly money laundering flows. The decline of mixing among ransomware actors over the years is very interesting and a testament to the disruptive impact of ransomware. 16 sanctions and law enforcement actions, such as those against Chipmixer, Tornado Cash, and Sinbad. Sanctions and law enforcement actions, such as those against Chipmixer, Tornado Cash, and Sinbad. In place of mixers, we have noted ransomware actors increasingly rely on cross-chain bridges to facilitate their off-ramping. In contrast, CEXs continue to be a mainstay of the ransomware off-ramping playbook, with 2024 seeing a slightly above-average reliance on these types of services, 39% versus 37% for the period between 2020 and 2024. It's worth calling out the substantial volumes of funds being held in personal wallets. Curiously, ransomware operators, a primarily financially motivated group, are abstaining from cashing out more than ever. We attribute this largely to increased caution and uncertainty amid what is probably perceived as law enforcement's unpredictable and decisive actions targeting individuals and services participating in or facilitating ransomware laundering, resulting in insecurity.
interesting logos is all the rage these days. Right from startups to old companies, everybody is looking for a unique logo that will help people identify their brand. If you are good with designing logos, then you can start providing the service on Fiverr. You can ask your clients to choose from specific templates or color schemes to create the logos. These logos
We attribute this largely to increased caution and uncertainty amid what is probably perceived as law enforcement's unpredictable and decisive actions targeting individuals and services participating in or facilitating ransomware laundering, resulting in insecurity among threat actors about where they can safely put. We attribute this largely to increased caution and uncertainty amid what is probably perceived as law enforcement's unpredictable and decisive actions targeting individuals and services participating in or facilitating ransomware laundering, resulting in insecurity among threat actors about where they can safely put their funds. While numerous factors are likely behind any one of the trends visible in the chart above, the decline in the use of no KYC exchanges since October 2024 may be attributed to the designation of Russia-based exchange Cryptex and the German Federal Criminal Police BKA's seizure of 47 Russian-language no KYC crypto exchanges, both in September 2024. The timing of those enforcement actions, coupled with the period when ransomware inflows to no KYC exchanges dwindled, is conspicuous. Ransomware. 17. Ransomware case studies. Kenev's arrest and its impact on Lockbit's operations. Between 2019 and 2024, Israeli-Russian dual citizen Rostislav Panev allegedly played a crucial role in supporting Lockbit. He is accused of developing several tools for the group, including one that enabled attackers to print ransom notes from any printer connected to compromised systems, for which he was reportedly paid around $230,000 in Bitcoin BTC. While Russian nationals, including Lockbit's administrator Dmitry Yuryevich Koroshev, have previously faced sanctions for their roles in these attacks, it is important to recognize that ransomware is truly a global threat, involving actors from around the world. Panev is currently in Israel awaiting extradition to the United States, where he is wanted for conspiracy to commit fraud, cybercrime, wire fraud, and other offenses. In the reactor graph we can see, for the indictment, the transfer of roughly $5,000 in BTC from Koroshev on a bi-weekly basis beginning in 2022. Then, from July 2023 through early 2024, approximately $10,000 in BTC was transferred to Koroshev on a monthly basis. Ransomware. 18. Panev's arrest potentially marked a significant blow to Lockbit's ability to reconstitute, and highlighted that, even years after a crime has been committed, blockchain's transparent and immutable nature continues to empower law enforcement to trace illicit activities and disrupt transnational cybercrime syndicates. The Lockbit takedown and Panev's arrest were major victories in 2024 and sparked a shift toward a more fragmented and less coordinated ecosystem. Iranian ransomware involvement. In addition to Russian-speaking cybercriminals, within the past several years, Iranian nationals have also been sanctioned by the U.S. Department of the Treasury's Office of Foreign Assets Control (OFAC) for their involvement in facilitating and conducting ransomware attacks. We've also previously noted on-chain evidence of Lockbit affiliates working with Iranian ransomware strains and depositing funds at an Iranian exchange. Fortunately, through our on-chain analysis, we can identify Iranian actors as they rebrand or switch to a different ROS. As we see in the below Chainalysis reactor graph, we tied 4 different ransomware strains to the same Iranian threat actor, who likely also deployed a popular ROS strain. We also see the reuse of deposit addresses at multiple global exchanges, connecting these seemingly disparate strains, not only to each other, but also confirming the operators' Iran ties. Ransomware. 19. Major strains rebranding. Launching offshoots. Since Akira's emergence, it has proven successful in exploiting vulnerabilities, particularly in enterprise environments, and has gained traction with a number of high-profile attacks. As we mentioned above, Akira is the only top 10 ransomware strain to have ramped up its efforts in H2 2024. In September 2024, Fog, a new ransomware strain, entered the scene, and has since demonstrated an ability to target critical vulnerabilities, much like Akira. Both groups have primarily focused on exploiting VPN vulnerabilities, which allows them to gain unauthorized access to networks and consequently deploy their ransomware. Both Akira and Fog have used identical money laundering methods, which are distinct from other ransomware strains, further supporting a connection between them. For instance, the following Chainalysis reactor graph shows that several wallets operated by Akira and Fog have transferred funds to the same no KYC exchange. In addition to Akira's relationship to Fog, we have also discerned links between the INC and Lynx ransomware variants by examining similar on-chain behaviors. Cybersecurity researchers have also noted the 2 strains' shared source code. Ransomware. 20. These overlapping relationships illustrate a broader trend within the ransomware ecosystem: the continuous evolution of cybercriminal strategies in response to increased law enforcement scrutiny. Navigating an evolving threat landscape. Ransomware in 2024 reflected shifts driven by law enforcement action, improved victim resilience, and emerging attack trends. Crackdowns and collaboration with incident response firms and blockchain experts helped disrupt many ransomware groups, reducing their profitability. Victims also demonstrated greater resistance to ransom demands, widening the gap between demands and payments. Financial strategies continue to adapt under law enforcement pressure, although malicious actors face increasing difficulties laundering payments from victims. Sustained collaboration and innovative defenses will remain critical to building on the progress made in 2024. Ransomware. 21. Darknet markets. Darknet markets. 22. Darknet market and fraud shop BTC revenues decline amid years-long international law enforcement disruption. A series of law enforcement takedowns in the last few years have shaped the 2024 drug and fraud ecosystems. While 2024 was likely a record year for crypto crime revenue overall, darknet market (DNM) and fraud shop inflows fell, with DNMs receiving just over $2 billion in BTC on-chain, and fraud shops $225 million. Historically, DNMs have been known for the illicit drug trade, but in recent years have differentiated themselves with unique service offerings. This trend, however, is not universal. For example, in Russia-based DNMs, the illicit drug trade remains predominant. Since last year's crypto crime report, the top-performing Russia-based DNMs have held steady, but Kraken DNM overtook Mega as the leading DNM by annual revenue in 2024. While Mega's inflows declined by more than 50% year-over-year, YoY Kraken DNMs rose nearly 68% YoY. Kraken DNM, which billed itself as Hydra's market successor, received $737 million on-chain in 2024. Darknet markets. 23. Blacksprut, which rose to prominence with Mega in the wake of Hydra's 2022 sanctions designation, law enforcement seizure, and subsequent collapse, came in third with 13.6% less revenue YoY. As reported last year, some drug shops have been outsourcing services like website hosting and payment processing. iKlad.biz and Klad.cc, shown in the chart above, are examples of those infrastructure providers. While these outfits are not traditional DNMs, their success highlights how drug vendors are scaling their operations throughout Russian-speaking countries. In spite of Hydra Market's disruption in 2022, former Hydra affiliates still found operating in today's DNMs rely heavily on these infrastructure providers. Last December, a Russian court imposed a life sentence on Stanislav Moiseyev, Hydra Market's suspected founder and operator. Although the Moscow prosecutor's office did not publicly tie the guilty verdict to Hydra, the court also sentenced 15 accomplices to anywhere from 8 to 23 years in maximum security penal colonies. Besides Hydra operators, other DNM administrators faced criminal prosecution in 2024. In March, Incognito Markets administrators conducted an exit scam. The FBI tied Taiwanese national Rui Siang Lin, Incognito's operator, to the DNM's website by tracing crypto transfers to an exchange account in Lin's name. Lin was charged with a host of crimes, and by May, federal authorities in New York had arrested him. Nemesis Market also saw its demise in March, when German authorities seized its infrastructure, along with $102,000 in cryptocurrency. Darknet Markets. 24. As international authorities have disrupted DNMs large and small in the last few years, cybercriminals and drug dealers have learned firsthand the consequences of running BTC accepting DNMs given the currency's inherent transparency. Many operators have since moved to accepting only Monero XMR, a privacy coin with features designed to boost anonymity and reduce traceability. XMR activity falls outside the scope of this report. Darknet market vendors evolve their on-chain behavior. Historically, DNMs have usually cashed out their funds at centralized exchanges (CEXs). Although CEXs remain a stable destination in the DNM ecosystem, the pattern of sending funds to them shifted in 2024, as illustrated in the chart below. Last year, DNM vendors sent a significantly higher portion of their funds to DeFi than they did historically. This trend is notable since DNMs operate largely in BTC or privacy coins. Throughout 2024, DNM vendors also sent far more value to personal wallets and stored funds on-chain. Retail vendors appear to be holding a greater portion of their proceeds on-chain than wholesale vendors, while wholesale vendors, those who distribute drugs in large quantities, are making greater use of DeFi. Darknet market and online pharmacy inflows according to drug purchasing behaviors. When looking at crypto inflows to DNMs in 2024, the data indicate that wholesale drug purchases were dominant, averaging between 71 and 81% of this year's total market share. For online pharmacies, wholesale purchases led in 2024, followed by large retail. Darknet markets. 25. Below are definitions for DNM purchase categories, based on purchase sizes, from which we infer buyer intent. Small retail. less than $100, likely made for personal consumption. Large retail, between $100 and $500, also likely made for personal consumption. Social supply, between $500 and $1,000, indicating customers may be sharing drugs with third parties in social settings. Potential wholesale, over $1,000, more likely made by drug sellers and distributors.
90. The best forex traders don't have losing trade. See smarter trading. How do you react when you lose? How do you feel? If you're angry or sad, chances are you were risking too much or taking a trade you knew you shouldn't. When we're looking at successful breakout traders, trend followers, scalpers, there is always a common theme. They all have a trading system and they stick to it. These traders don't get emotional when they take a loss. They were trading according to their rules and the trade didn't work out. They lost a predetermined amount they were comfortable with and accepted as an unavoidable part of trading. They move on to the next trade, knowing their system is profitable over the long term. ACTINT. An inexperienced forex trader might take a long position in an uptrend thinking the market is continuing to move up. They didn't put a stop loss on the trade, as they were confident about the overall direction and worried about getting easily stopped out. They think, I'll exit if it moves against me. Very skilled traders in the market quickly moved 100 pips against them. They are now looking at the 100 pip loss when it can be converted into a fraction of that. Now what? The market snaps back 50 pips. See inexperienced traders relieved. Maybe it's going back up. Bam! Classic 50% retrace before continuation. The market buys another 100 pips. This is too much for our trader. He finally cut his trade at the lows to 150 pips. Over the next few sessions, pair recovers to his original interest and beyond. Line no trend. Did they do the right thing? Cutting at minus 100 pips.
Over $1,000, more likely made by drug sellers and distributors. When examining drug purchasing habits from DNMs spanning 2020 to 2024, some patterns emerge, in particular about wholesale activity, that is, purchases likely made by organizations with the intent to redistribute. First, the major drawdown in DNM wholesale revenue in 2022 can be attributed to the Hydra market takedown. Second, while wholesale drug purchasing revenues have steadily climbed since that drop, they have yet to regain their former highs. This could indicate that 1. No DNM since Hydra has established itself as the premier destination for wholesale drug purchases. 2. Global law enforcement operations are becoming increasingly effective in disrupting markets that cater to these purchasers. Darknet markets. 26. Free. Sellers and vendors are resorting to other channels, like instant messaging platforms, and/or payment methods for illicit drug trade. As for online pharmacies, these have predominantly catered to wholesale and large retail customers in the last several years, and 2024 saw growth in wholesale purchases toward the end of last year. Like DNMs, online pharmacies receive most of their revenues from larger drug resellers. Abacus Market. Facilitating illicit drug trade. In 2024, Abacus Market was the highest earning DNM serving Western customers. Last year, Abacus Market received $43.3 million on-chain. Since 2021, Abacus Market's revenue has increased substantially, and in 2024, it more than doubled, growing by 183.2% YoY. This increase may be due in part to the closures of top DNMs, the shift to the exclusive acceptance of XMR by other active markets, and delistings of XMR by popular centralized exchanges. The below graph shows an increase in Abacus sales in BTC following the closure of ASAP Market in July 2023, and a further increase following some CEX's delisting XMR. Darknet markets. 27. Abacus Market has a global presence and broad product offering. Below is a screenshot from the Abacus Market website showing the range of items it sells, with drugs and chemicals representing the overwhelming majority of its products. Darknet markets. 28. On Abacus Market, the US, Canada, Germany, Australia, and the UK have the highest number of listings. In the US, there's a large diversity in the types of products sold, including counterfeit pills. For example, in the screenshot below, an American vendor lists protonidazine powder and advertises its uses as a counterfeit for oxycodone, also referred to as M30 inches, i.e. 30 milligrams. Darknet markets. 29. While the U.S. market is best characterized by its diverse product offerings, other countries offer regional specialties. In Colombia, for instance, many of the vendor listings are for cocaine or infrastructure as a service, as seen in the screenshot below. Darknet markets. 30. Some countries have just one or a few vendors with a loyal customer base and a wider selection of goods. For example, in India, one of the most frequent listings is for generic medication, which mostly comes from the first vendor shown below. China-based Abacus vendors have many listings for research chemicals. They also sell PMK and BMK. which are precursors to MDMA and methamphetamine, respectively. Darknet market connection to Chinese pill press manufacturers. While China-based vendors are frequently referenced as the source of precursors for dangerous synthetic drugs, their involvement in machinery sales is also an important aspect of the drug supply chain. 1. Darknet markets. 31. China-based pill press manufacturer which advertises on ClearNet business-to-business B2B websites has on-chain ties to drug vendors on Abacus Market. Along with its listings for large pill press machines, the vendor does not hide the sale of OxyContin and Xanax TDP dye kits, which are used to press counterfeit pills. The vendor accepts BTC and XMR, and analyzing its on-chain exposure to regional CEXs and DNMs reveals that it serves customers worldwide, including in the United States, Canada, Sweden, and Russia. The reactor graph below shows this vendor's connection with drug vendors on Abacus Market. While not all are pictured above, in total, we found 16 vendors either selling or sourcing drug material from Abacus and purchasing production supplies from this China-based vendor. China-based vendors and novel synthetic opioids. China-based precursor manufacturers mark the beginning of the synthetic drug supply chain. In years past, these organizations were more overt in their display of such products, openly advertising on mainstream B2B websites. Depending on the severity of the chemical, some manufacturers still follow this practice. In 2024, however, many vendors of reagents and precursors have turned to criminal forums to advertise their product offerings, or have delisted, at least publicly, chemicals related to fentanyl synthesis. This could be in response to increasing pressure from the United States and China, and the crackdown on the websites selling these products. The organized crime section of this report, which discusses the nexus between Mexican cartels and Chinese fentanyl precursor manufacturers, indicates that this corridor still exists, although overall inflows to these manufacturers have seen a dip. In addition to fentanyl, the presence of nitazenes in the global supply of dangerous synthetic opioids has increased, and China-based vendors have established themselves as the initial source. Nitazenes are a type of synthetic opioid with a similar potency to fentanyl. The US and Europe have seen an increase in darknet markets. 32 nitazene-related overdose deaths in recent years, perhaps due to the halt in the heroin supply following the Taliban's crackdown. Nitazene-related overdose deaths in recent years, perhaps due to the halt in the heroin supply following the Taliban's crackdown. Due to the novelty of these substances, and the fact that many are analogs, the true number of overdoses in Europe could be higher, as forensic drug testing may lag behind the pace of the crisis. In addition to various benzodiazepines, stimulants, and psychedelics, one long-standing China-based research chemical manufacturer also sells nitazines. The vendor's listing of a protonitazine analog boldly states that the compound has a potency 20x greater than that of fentanyl, as seen below. In this listing, the vendor offers free shipping to the U.S. Once received by the buyer, the compound could be pressed into counterfeit pills, like M30s, and further distributed to end consumers. Screenshot from a China-based research chemical manufacturer's website. This vendor is known for supplying chemicals in bulk. Deposits span from the hundreds to the tens of thousands of dollars, and the average deposit amount in 2024 was over $2,000. On-chain data indicates the vendor supplies these drugs to other chain-illicit identified online pharmacies and DNM vendors, all while maintaining a far-reaching global customer base throughout North America, Europe, Australia, and South America. Interestingly, this vendor has also been a trusted supplier for OFAC-designated fentanyl traffickers Alex Adrianus Martinus Painenberg and Matthew Simon Grimm, having received close to $1.5 million in purchases from them. Darknet markets. 33. Fraud shop revenues decline in 2024. Fraud shops are services found mainly on the dark web that sell stolen data and personally identifiable information, which cybercriminals use for scams, identity theft, and ransomware attacks. In 2024, fraud shop inflows declined by 50% YoY, a sharp downturn from the last 3 years. Darknet markets. 34. A few factors likely influenced this BTC revenue decline among fraud shops. The elimination of UAPS, a payment processor on which many fraud shops relied. U.S. agencies and other international authorities prioritizing the takedown of fraud-related services. A migration away from BTC payments to XMR, as observed with DNMIS. UAPS. The takedown of a fraud shop payment processor and its impact on ecosystem. Last September, OFAC designated Sergei Sergeyevich Ivanov, the alleged creator and operator of Universal Anonymous Payment System (UAPS), a payment processor used by many fraud shops, as well as PM2BTC, a Russian virtual currency exchanger associated with Ivanov, and Cryptex, a crypto exchange operating in Russia and registered in St. Vincent and the Grenadines. These actions were part of a coordinated effort among U.S. government agencies and foreign counterparts to combat Russian illicit finance. In September 2024, the U.S. Secret Service's Cyber Investigative Section, Netherlands Police, and the Dutch Fiscal Intelligence and Investigation Service (FIOD) seized web domains and infrastructure linked to UAPS, PM2BTC, and Cryptex. After the UAPS infrastructure takedown, we observed a swift decline in on-chain activity from UAPS counterparties, indicating that many fraud shops relied on this infrastructure to process customer payments. The chart below shows this counterparty decline, as well as a drop in crypto flows across the fraud shop ecosystem. Darknet markets. 35. Conversely, some fraud shops saw an increase in activity and higher revenues on-chain. The chart below shows fraud shops that performed well after the UAPS takedown, indicating that the customer migration was swift, and favored long-standing, trusted fraud shops like Bclub and Bancomat. Revenues for the fraud shops on the right side of the chart declined, suggesting their dependence on UAPS for payment infrastructure. The fraud shop Ghost Gun Connection, a case study. Ghost guns, assembled with prefabricated parts and without required serial numbers, are nearly always designed to be semi-automatic firearms, and are almost impossible to trace. Everytown, an organization that works to prevent gun violence in America, calls ghost guns a weapon of choice for violent criminals and extremists. In 2023, the New York Police Department (NYPD) Intelligence Bureau, which predominantly handles counter-terrorism cases, received a tip about two people in New York City involved in manufacturing and selling ghost guns. Using a series of search warrants and subpoenas, the NYPD found the suspects' online raw material purchases, and uncovered a crypto dimension to the case, not publicly shared until now. Suspects were exchanging large sums of fiat for cryptocurrency by transferring cash into a mainstream CEX account and buying BTC, which they used to purchase stolen credit cards and identities from fraud shops on the dark web. The reactor graph below shows 5 purchases made to fraud shops, 4 of which passed through intermediary addresses. Darknet markets. 36. With these stolen credentials, the suspects purchased ghost gun parts and tools from a variety of legitimate websites, which they used to build ghost guns with a 3D printer, and sell for cash. A Manhattan district attorney successfully used this evidence to bring charges against one of the suspects. Continued law enforcement efforts key to illicit market disruption. While D&M and fraud shop revenues declined in 2024 following years of concerted international law enforcement efforts, these platforms have managed to sustain their operations by adopting new tactics. In spite of disruptions to the dark web ecosystem, DNMs in particular continue to play a significant role in enabling the China-based synthetic drug production supply chain, highlighting the necessity for ongoing global cooperation to disrupt and dismantle illicit drug networks worldwide. Darknet markets. 37. Market manipulation. Market manipulation. 38. Suspected wash trading on select blockchains may account for up to $2.57 billion in trading volume. In last year's report, we introduced a novel methodology for detecting suspicious trading patterns in crypto markets by analyzing on-chain data. We focused on decentralized finance DeFi, given its transparency and the availability of on-chain information, which is not similarly available in centralized trading platforms. Our approach tracks patterns of behavior and not intent, which means that it is not by itself sufficient to prove market manipulation. However, it provides a valuable starting point for deeper investigations when combined with off-chain information. This focus on foundational insights is also why we do not estimate victim losses, as such calculations require significantly more data beyond on-chain analysis. This chapter zeroes in on two prevalent forms of market manipulation: wash trading and pump and dump schemes. Wash trading involves artificially inflating trading volume by repeatedly buying and selling the same asset, creating a misleading perception of demand. Pump and dump schemes lure unsuspecting investors by driving up the price of an asset, often through coordinated hype, only for insiders to sell off their holdings at a peak, leaving unwitting holders of the asset with significant losses. Keep reading as we delve into our methodologies for uncovering these suspicious patterns, providing a clearer view of how market manipulation manifests in the crypto space. Heuristics enable identification of patterns of potential wash trashing, which show concentration in specific pools and among fewer actors. While there are subtle differences in the legal definitions of wash trading across jurisdictions, wash trades are generally understood to involve the near simultaneous buying and selling of an asset without any change in beneficial interest, ownership, or market position. Currently, most of the academic research on wash trading in crypto has been focused on centralized exchanges, CEXs, where possible motivations for inflating trade volumes include attracting users or climbing leaderboards. Unlike trading on CEXs, doing so on decentralized exchanges, DEXs, incurs gas fees. making wash trading potentially more expensive. Nonetheless, such activity still exists. Financial regulators around the world face challenges in identifying wash trading in traditional markets because collusion strategies vary and collusive transactions can be masked among normal trading activities. These challenges often take different forms in the crypto space, where pseudonymity, the use of decentralized platforms, and a lack of comprehensive regulatory oversight add complexity. Market manipulation. 39. During our research, which primarily focuses on fungible tokens such as ERC20 tokens and BEP20 tokens, we encountered the following difficulties in identifying wash trading. 1. Maximal extractable value (MEV) bots and arbitrageurs share characteristics with wash trading, as they buy and sell the same token pairs in very short time intervals. However, this activity is not typically directed at driving up volumes, but rather at capturing arbitrage opportunities. 2. Most of the DEXs we studied are AMM-based, automatic market makers, rather than order book-based, as is common in most traditional financial markets. In order book-based markets, traders execute trades with a direct counterparty at a price set by one of the two parties to the transactions. In AMM-based markets, traders execute trades against a pool of assets supplied by liquidity providers at an algorithmically determined price. In the absence of a single trader sitting on both sides of a trade, it is more challenging to identify activity that would achieve a prearranged wash result. Additionally, over a certain period, if the fundamental analysis hints at a positive outlook for a particular currency pair, it indicates that the price of that pair would experience an upward trajectory movement in the near future. A negative outlook indicates a declining price movement of currency pair in coming future. A neutral instance on currency pair indicates a flat, not much plus Bay or Bayside movement in the near future. When to use fundamental analysis for the Forex market. Whenever a Forex trader receives information about the state of a country, he conducts a fundamental analysis to gauge the impact of this on various currency pairs. Forex traders and investors always look into reports, fundamental analysis reports based on critical economic data before trading a particular currency pair on Forex market. These reports, FA, also
The fundamental analysis report for any market